Stop everything you are doing right now. Stop checking your notifications. Stop scrolling. Close every other tab on your browser and listen to the sound of a global financial system snapping in half. What you are about to hear is the brutal truth that the mainstream financial media is paid to hide from you. While the world was distracted by holiday celebrations, a tectonic shift occurred in the dark. At exactly 2 a.m. today, in the industrial heart of Ticino, Switzerland, the flow of physical silver to the Western world was effectively severed. The largest refineries on Earth have gone silent. There were no sirens and there were no headlines, but the vault doors have been locked to the outside world. This is the moment the paper illusion died. You have been conditioned to follow the noise of the market, but that noise is a lie designed to keep you passive while the elite exit the burning building. In Beijing, the authorities have just activated a geopolitical doomsday weapon by consolidating 44 strategic companies into a single export blockade. This move turns silver from a simple industrial metal into a tool of absolute economic warfare. Right now, there is a line of global pension funds holding $47 billion in buy orders that are scheduled to execute into a vacuum of zero liquidity. We are entering the ghost week where the machines take over and the major banks are in a state of pure, unadulterated panic. Do not be deceived by the $72 price on your screen. That number is a ghost of a dead system. The real price is being decided in the shadows, and it is heading toward $200 with the force of 1,000 suns. JP Morgan and HSBC have already surrendered their short positions and are now paying record premiums for physical bars because they know the COMEX is a hollow shell. They are not buying for profit, they are buying for survival. If you are waiting for a better entry point, you are waiting for a ship that has already left the harbor. The next few minutes will define your financial future for the next decade. This is not a drill. This is the end of the manipulation and the beginning of the great silver squeeze. The biggest mistake you can make right now is looking at $72 and thinking it is expensive. Your brain is calibrated to a world that no longer exists. You are measuring value with a ruler that is shrinking every single second. We must stop talking about the price of silver and start talking about the death of the system. For 40 years, you were told that silver was a dead rock that belonged in the basement of history. You were gaslighted into believing that $15 or $20 was the natural state of this metal. But that was not a market. That was a controlled demolition of value. What you are seeing today is not a rally. It is a repricing of reality. When the central banks print trillions of dollars out of thin air, they are not creating wealth. They are stealing the purchasing power of your labor. Silver is simply the mirror that reflects this destruction. At $72, silver is not at a peak. It is at a new floor. If we adjust the 1980 high for real inflation, silver should be trading at over $170 right now. If we look at the amount of currency in circulation, the real value of an ounce of silver should be closer to $900. The problem is not that silver is going up. The problem is that the dollar is going down. You are holding a currency that has lost 99% of its value since the creation of the Federal Reserve. When you see $72 on your screen, you are not looking at a bubble. You are looking at the final verdict of a failed monetary experiment. The bankers want you to feel vertigo. They want you to feel scared of the height so that you will sell your physical metal back to them. They need your ounces to cover their massive delivery failures. They are trying to convince you to trade a permanent asset for a disappearing currency. Do not fall for the trap of thinking in nominal terms. A bank account with $1 million is useless if that $1 million cannot buy a loaf of bread. An ounce of silver is a constant. It is the same ounce that funded empires and survived every currency collapse in human history. The system is no longer broken, it is finished. We are moving from a world of paper promises to a world of physical reality. In this new reality, $72 is the cheapest entry point you will ever see again. To understand why the system is collapsing, you must understand the difference between the price you see on a screen and the metal you can hold in your hand. For decades, the global silver market has been an illusion built on paper. For every 1 ounce of physical silver that actually exists in a vault, there are hundreds of ounces of paper silver traded on digital exchanges. This is what we call the paper to physical ratio. It is a massive game of musical chairs. As long as nobody asks for their metal, the music keeps playing. But the music has just stopped. What happened at 2 a.m. in Switzerland was a signal that the physical supply is gone. The major bullion banks like JP Morgan and HSBC have spent years selling naked short contracts. They sold silver they did not own to keep the price artificially low. They relied on the fact that most investors are happy to hold a digital receipt. But now, the big players are no longer accepting receipts. They want the bars. They want the physical weight in their own vaults. This is the ultimate counterparty risk. When you hold a paper contract, you are not an owner. You are a creditor to a bank that may not have the collateral to pay you back. The free float illusion is vanishing. The term free float refers to the amount of metal available for immediate delivery. Right now, that number is approaching zero. The registered inventories at the COMEX have been depleted at an alarming rate. We are witnessing a physical drain that the system cannot replenish. When you hear that JP Morgan bought 12 million ounces at $72, you are watching a bank try to cover its own tracks. They are not speculating on a price move. They are desperately trying to find physical metal to settle their outstanding obligations before the defaults begin. In a world of paper, the supply is infinite because they can just print more contracts. In the real world, the supply is finite. It is limited by the earth, the mines, and the refineries. When the paper market finally breaks, the price will not just go up, it will gap to a level that reflects the true scarcity of the metal. You must realize that the digital numbers on your trading app are just pixels. They have no weight, they have no history, and in a crisis, they have no value. Only the physical metal carries no counterparty risk. Only the physical metal is truly yours. The transition from paper promises to physical reality is going to be violent, and it has already begun. To predict where we are going, we must look at where we have been. The human brain is naturally wired to fear new heights. When you see silver at $72, your instinct tells you that it must come down because it has never been here before. But history proves that when a currency dies, price discovery has no ceiling. Think back to 1980. The Hunt brothers tried to corner the silver market, and the price spiked to $50 an ounce. If we take that $50 peak and adjust it for the massive inflation of the last 4 decades, silver would need to be over $170 today just to match that same value. We are not in a bubble. We are in a delayed reaction. For 20 years, the price of silver was held in a straitjacket by the big banks. They created a false psychology where $20 felt normal and $30 felt expensive. They anchored your mind to a low number so they could accumulate the real wealth for themselves. But the anchor has been ripped out of the ground. The gold-to-silver ratio, which has historically been 15-to-1 for thousands of years, is currently screaming that silver is the most undervalued asset on the planet. If gold is at $4,500, a return to the historical 15-to-1 ratio would put silver at $300 per ounce. This is the psychological shift you must prepare for. $72 is not the destination. It is the first rest stop on a very long journey. The elite are already comfortable with these numbers. They are the ones buying at $72 while telling you to be cautious. In 1973, during the oil crisis, the price of energy did not just rise. It experienced a permanent step up to a new reality. We are witnessing the same phenomenon in silver. The demand from the electric vehicle industry and the solar sector has created a fundamental floor that did not exist in the past. You must expand your imagination to match the expansion of the money supply. When the government prints trillions of dollars, the old price anchors become irrelevant. Stop thinking like a retail trader and start thinking like a central bank. They do not care about the daily fluctuations. They care about the total number of ounces they control. The history books are being rewritten in real time. The numbers that feel impossible today will be the bargain prices you tell your grandchildren about. Do not let the vertigo of the present moment blind you to the inevitability of the future. The path to $200 is paved with the ghost of the old financial system. The road to $200 is not a straight line. It is a battlefield littered with the corpses of retail traders who thought they could outsmart the house. You must understand that the bankers are masters of psychological warfare. They know that after a massive run to $72, the average investor is nervous. They know you are looking for any excuse to hit the sell button and lock in your modest profits. This is where they set the trap. It is called the volatility wash. During this ghost week, when liquidity is paper thin, a single large sell order can send the price tumbling $5 or $6 in a matter of minutes. This is an orchestrated move designed to trigger your stop-loss orders and create a wave of panic. The media will play its part. The moment the price dips, the headlines will scream that the silver bubble has finally burst. They will call you a fool for holding on. They want you to feel the pain of a red screen so intensely that you surrender your physical metal just to make the feeling stop. But you must look past the screen. A $5 drop in the paper price does not mean the silver in your safe has changed. It does not mean the shortage in the refineries has vanished. It is a digital shadow play. The banks are desperate for your ounces because they cannot find them anywhere else. Every time they shake the tree, they are hoping you are the fruit that falls. If you are trading with leverage or using margin, you are already a victim. In this environment, volatility cuts both ways like a double-edged sword. One sharp move can wipe out your entire account before the real recovery begins. This is why the elite hold physical. Physical silver cannot be margin called. It does not require a password to access, and it does not care about a midnight flash crash on the COMEX. When the market drops, do not ask why the price is falling. Ask who is buying the dip. While the retail crowd panics and sells at 67, the sovereign wealth funds and the industrial giants are waiting with open bags to catch every single ounce. They are moving the silver from weak hands to strong hands. You must acclimate to the altitude. High volatility is the price of admission for a historic squeeze. If you cannot handle a 10% correction, you do not deserve a 1,000% gain. The volatility is not a sign that the trade is over. It is a sign that the pressure is building to a breaking point. Hold your position, ignore the noise. The price on the screen is a lie, but the weight of the silver in your hand is the truth. The trap is set for the fearful. The fortune is reserved for the disciplined. In a world of chaos, you must ignore the headlines and watch the plumbing. The financial system is a machine, and like any machine, it gives off warning signs before it explodes. To navigate the journey to $200, you need to monitor 3 specific signals that the mainstream media will never explain to you. The first signal is the yield on the 10-year Treasury bond. This is the heartbeat of the global debt market. When yields begin to spike alongside the price of silver, it tells you that the bond market is losing confidence in the central bank. It means the big money is fleeing the safety of government debt and searching for a lifeboat in hard assets. If you see the 10-year yield breaking through key psychological levels, understand that the silver squeeze is about to accelerate. The second signal is the liquidity of the physical market, specifically the premiums charged by the major refineries in Switzerland and Singapore. Watch the gap between the spot price on your screen and the actual cost to buy a 1,000-ounce bar. When that gap starts to widen, it means the paper market has lost its ability to discover the real price. If the screen says $72, but the refinery demands $85 for immediate delivery, the game is over. The physical market has taken command. The third and most critical signal is coming from the East. You must watch the export policies of the 44 Chinese entities that now control the global silver supply chain. China is not playing a short-term trade. They are executing a multi-decade strategy to dominate the green energy revolution. When Beijing restricts silver exports, they are not just raising the price. They are starving the Western military-industrial complex of a critical strategic resource. Keep a close eye on the gold-to-silver ratio. This is the ultimate thermometer of silver's value. Historically, this ratio has always returned to its mean. As gold pushes past $4,500, the pressure on silver to catch up becomes a mathematical certainty. A collapsing ratio is the sound of silver reclaiming its throne as the true currency of the people. Do not be distracted by the political theater in Washington or the latest celebrity scandal. Watch the bond yields, watch the physical premiums, and watch the movements of the Chinese dragon. These are the signals that define the trend. Everything else is just noise designed to keep you from seeing the truth. If these 3 signals are flashing red, you stay in your position. You do not blink. You do not sell. You wait for the system to settle the bill at the price you dictate. Every professional strategy must have a point of invalidation. If you are not looking for the signs that you are wrong, you are not an investor, you are a gambler. To survive the journey to $200, you must establish a framework of risk that is as cold and calculated as the banks we are trading against. The first risk we must address is the possibility of a total exchange shutdown. If the COMEX realizes they cannot meet delivery, they may not let the price go to the moon. They might simply change the rules, move to cash settlement only, or freeze trading for an indefinite period. This is why holding physical metal outside of the banking system is your primary insurance policy. If the digital exchange goes dark, your physical silver is the only asset that remains liquid in the real world. The second risk is a temporary deflationary crash. In a global liquidity crisis, everything can be sold to cover margin calls on other assets. We saw this in 2008 and again in 2020. Even though the long-term trend is up, silver can be dragged down in a short-term panic. You must ensure that you are not over-leveraged. If you are using money that you need for rent or food next month, you have already lost the psychological war. Your position size must be small enough to endure a 20% drop without forcing you to sell. The third factor to watch is a massive shift in central bank policy. If the Federal Reserve suddenly stops printing, raises interest rates to 20%, and actually begins to back the dollar with a hard asset, the silver squeeze would lose its primary engine. However, looking at the current debt levels of over $34 trillion, this scenario is mathematically impossible without collapsing the entire United States government. They are trapped in a cycle of printing, and that is the wind at your back. You must also monitor the industrial demand. If a new technology replaces silver in solar panels or electric vehicles, the long-term supply deficit could shrink. But right now, the opposite is happening. Silver is becoming more essential, not less. Discipline is not about being right all the time. Discipline is about having a plan for when the market moves against you. Set your invalidation points. If the price breaks back below the 50-day moving average on massive volume, we re-evaluate. But until then, the trend is your friend. Do not let greed cloud your judgment. Have a plan to take partial profits at key milestones, but keep your core position for the final endgame. The goal is to be the last person standing when the dust of the currency collapse finally settles. Risk management is the only thing that separates the wealthy from the lucky. The time for debate is over. The data is on the table, the vaults are emptying, and the largest banks in the world have already signaled their surrender. We are standing at the threshold of a wealth transfer so massive that it will redefine the middle class for the next century. But as we close this analysis, I must give you one final, sobering warning. Most people will watch this move to $200 and they will still end up losing money. They will lose because they are addicted to the dopamine of the daily ticker. They will lose because they will wait for the evening news to tell them it is safe to buy. By the time the mainstream media admits that silver is in a permanent shortage, the opportunity to secure your family's future will have vanished. Do not let FOMO be your advisor. The fear of missing out is a dangerous emotion that leads to reckless decisions at the top of a cycle. Your advantage is not in your speed, but in your vision. You have seen the secrets of the 2 a.m. Swiss lockdown. You understand the $47 billion wave waiting to crash in January. You know the truth about the 44 entities in Beijing. This knowledge is your armor. The coming months will be a test of character. You will see prices that feel like science fiction. You will see volatility that looks like a heart attack. Through it all, you must remember why you started this journey. You are not buying silver to get more paper dollars. You are buying silver to exit a system that is designed to consume your life's work through inflation and manipulation. Treat your physical silver like a family heirloom. It is not a trade. It is a lifeboat. When the history books are written about the great collapse of the 2020s, there will be two groups of people. There will be those who trusted the paper promises of a dying empire, and there were those who held the cold, hard reality of precious metals. The window of opportunity is closing. The ghost week is almost over, and the machines are warming up for a January move that will shock the world. Stay sharp, stay disciplined, and above all, stay stacked. The system is breaking, but you don't have to break with it. This is the end of the beginning. The real silver squeeze has only just begun.